Morning, everybody. Happy Tuesday. I missed this, I should say, Tuesday volatility, because the markets were closed yesterday for Juneteenth, and today they're open. Markets are down at the moment. The NASDAQ currently down by, I think, 0.2%. Actually 0.3% right now. The S&P currently down by 0.3%. The Dow Jones currently down by 0.3%. So it's a very broad sell-off. Everything is getting sold off about 0.3% as of right now. The Qs was in the lead, but that actually pulled back in the last about 10-15 minutes. Currently, I've got a neutral trade on the Qs with an iron condor, but I do have a put too, and I think today we're going to see some downside judging by what we're seeing in the options market on the Qs. If we're looking at the open interest, there's a lot of open interest down below, and where we're at right now, starting at the 368 strike price, you have 7,400 puts versus only 3,500 calls. Next hottest table, the 366 with 7,000 puts versus only 1,200 calls. 8,600 at the 365 strike price versus only 2,400 calls. And then 8,100 of the 364 strike versus only 164 calls. So right now, considering that we're starting below 368, it looks like it's going to be a bearish morning. And maybe you're going to see 364 sometime, maybe in the first 30 minutes if it gets really rough. But that would be my guess. Maybe we see below 364 today. All right, we're starting at 366, 2 minutes to open. Let's check out the big names where they're trading. Apple is down about 50 cents, not really much change there. Microsoft, that's actually a pretty decent move, about $4 for Microsoft. It's about 1%, a little bit more than 1%. Q's 366. Meta is down about $3, about 1%. Tesla is down, actually Tesla's up by $1.50. Amazon dragging 124.90 from 125.50, down 50 cents. Google down about 50 cents as well. And then Nvidia is actually up about $3, or about 0.75%. SPY call 439. Let's see, SPY, it's down by 0.3% this morning. And there's a very broad sell-off. It's not just in the Qs, but also in the Russell 2000 and the Dow Jones. So I personally wouldn't want to be in calls this morning. If we're looking at the open interest for today, June 20th expiration, there's a lot more puts open at these strike prices than there are calls until you get to 440. So I would be hesitant on any calls this morning, but we'll see. We'll see how this market opens. My guess is it's going to be a shot down. 366 is where we're starting. My iron condors are surprisingly up. Kind of breaking even right now. I've got 8 of them that I opened at what price? Let's see. 46, and they're going for 46, so I'm at break even right now for these. If I can get any profit out of them, that would be good, but we're starting off pretty weak. RSI is at 40, starting at 366, so mechanically we would go down because all of these puts are becoming in the money. I just saw an ask of 42. I'll try to get it out of that. That would be nice. I don't think that I'll be able to get that, but we can always try it. All right, looks like we're going up on the open. 366.56. First 5-minute candle is in the green. Back to 55 for the RSI. And I just got filled to close those. 336 for 8 of them, so that was a close of 42 cents each. So I got my limit price. Just took profits on the QQQ, Iron Condor, expiring today. Today is the 20th, 520 at 42 each. Strike prices that I chose were 365, 366, and the calls were 372, 373, I think. Let me double check, just in case. 371, 372, actually. There we go. So out of that neutral position, currently trading at 367 for QQQ. So again, we're still bearish. Looking at the open interest, there is 5,500 puts at the 367 strike price and only 2,300. So the open interest does start to slow down up here, but the 368 strike price is still pretty popular for puts too, with 7,400 versus only 3,500. So could end up being flat for the morning between 367, 368. And then I'm still thinking that we could get down to 364 by the end of the day, which is about 1% down from where it's trading. But right now it does seem like we're reversing. We're at 62 on the RSI, so strength is pretty good. Not overbought yet to signal extreme strength, but nice little rebound for sure. Good morning, Steve. Let's see. We've also got a 360 put. This one's down a little bit this morning since we got that little rebound. Let's go for 72. I ended up purchasing it for 162. A little bit too early, but let's see how this plays out. I gotta check. Okay. Let's check on the big names. Looks like Tesla's still up at 265 almost. Let's see where the popular strike prices are for this week. Probably the 265 calls are hot. Yeah, 13,000 of those versus only 3,600 puts. The 260 strike price has 17,000 calls versus only 8,200 puts. So yeah, there's still kind of a gamma squeeze going on here with about double the amount of calls to puts above 260. So still some buying pressure from the market makers to keep pushing Tesla up. Let's check in on Nvidia, see if that's the same. Probably. There's not that much open interest compared to Tesla, at least. It is a more expensive stock, so that does bring down the open interest. But the 435s have 8,000 calls, only 2,400 puts. And the hottest strike price is the 450 with 18,000 versus only 600 puts. Getting to 450 though, that's a bit of a stretch from where it's at right now. It'll be a 20 move over 430, 4.6% by the end of the week, which could happen, but it's just unlikely given that we've already seen the huge gamma squeeze. So I feel like these calls are probably too far out of the money in order to get a gamma squeeze for Nvidia. Tesla, on the other hand, I think still has the potential for it. It's not that far out of the money with a 270. It's only a $5 move. On 265, it's only 1.8%. So that's more feasible. That Tesla would continue to squeeze this week, whereas Nvidia, maybe not. Took profits on the SPY call. Very nice. Good morning, Mitch. Yeah, Tesla is moving here. Let's see how much that 270 call is going for that everybody is chasing. That would be a nice little hedge against my Qs puts. They're going for 550, and then the 265 is going for 750. So you could get a 265, 270 call debit spread for about $2, $200 each. I might take that trade, actually. That seems like a pretty decent swing, at least so far this morning. Tesla's up 2%. Let's see. That's not the price that I wanted. It's going for 280. I thought I had calculated it. 760, 550 for the bids. I guess you have to take the difference between the bid and the ask. You're buying the 265, so that would be 780 minus 560. 780, 560. Should be going for 220, but I'm seeing 280. That's strange. Very odd. 770. 560, yeah. I don't know why it's going for so much cheaper. Let's see if I set it up on Thinkorswim if I'm seeing the right numbers. Vertical. Change this to 270. Yeah, it's saying 208. Oh, that would be the reason. We've got the puts selected. Tesla. All right. So I'll try to snag them at 210 or 215. Yeah, got it in at 215 there. Just opened a new, if I can type, Tesla call debit spread. Expiring the 23rd, 6/23 at 2:15. And assuming Tesla to 270. So let's see if that plays out by the end of the week. That's probably going to be a swing trade for me. Again, it only needs to go up about 2%, and there's a lot more calls up there with 14,300 calls versus only 1,500 puts. And even at the 265 strike price where we're at right now, there's 13,000 calls and only 3,600 puts. So more likely that we're going to see upside with the price levels that we're currently at. AI got wings. Good morning, Jesse. Felt like it went by slow. Yeah, those 3-day weekends. Oh, they changed up the order confirmations on Robinhood. It looks a lot cleaner now. Anyway, let's see where we're at with other big names. Amazon's doing pretty well on the jump. Very similar to what you're seeing for Qs. That morning dip followed by that rip up to 60 on the RSI. So strong but not extreme, which is good. Let's see. Amazon similar. Apple kind of leading up here, up 0.5%. Nvidia's up 1.3%, and Tesla 1.7% today. Looks like you're seeing the IWM down pretty bad, 0.4%. SPY is down 0.4%, and the Dow Jones is down 0.5%. So the Dow Jones and IWM are the laggers right now. And I think that with all the Fed speakers that are coming out this week, they're probably going to try to explain why they want to raise rates another 50 basis points from where they're at right now. So my guess, what you're going to see is the KRE regional banks probably taking a hit today or this week with all the Fed speakers coming out. So I think we're going to see a drop in KRE by the end of the week. Maybe give it a couple weeks to digest. It's trading at 42.30 right now. Looking at supports and resistance, there is one about 41, which we're at 42.20, so that wouldn't be a huge drop that you need. Let's see, $1 over 42. It's a 2% drop. I think that could play out in the next couple weeks. We do have a gap down on the KRE, maybe. Nah, it might be filled. Let's see. No, it's not filled in, actually. So there is a gap above for KRE. But let's check to see how much a put debit spread on KRE would cost. See if it's any cheap. June 30th expiration. 42, 41 strike prices. Currently going for 44 cents right now. Oh, that's for the bid ask, actually, so it could be a little bit cheaper. Might be able to get it at 40. The mid price is 38, so we'll start at the mid price and work our way up. Not filled for 38. And go to 39. Filled at 39 each. All right, 39. All right, QQQ seems to be chilling between 367, 368, closer to 368, but not passing it up just yet. Again, lots of puts at the 368 strike price. We'll see if there's some calls building up on the volume though. 13,000 calls bought with the 368 strike price and only 3,400 puts. So a lot of people getting into the 368 calls now. But the open interest is still double on the puts. So we'll see how that kind of balances out. How to use open interest to analyze where the stock is going to move. Yeah. So basically you're just looking, I'll just do a quick way. You're looking for the open interest and you're just comparing the calls and the puts at different strike prices. So what you're going to do is you're going to look for the most popular strike prices on one side or the other. So looking at the 368, there's 7,400 puts, and any surrounding strike price doesn't have nearly as many. So you have the 368 puts with 7,400 open interest and only 3,500 calls. And then you work your way down to the next popular strike price, which would be the 366 with 7,100 or 7,000 and only 1,200 calls. And then the 365 strike price, the next hottest with 8,600 puts, 2,400 calls. So what this tells you is that below 368, there's more incentive for the market makers to sell off the shares to hedge their positions because they're the ones that are selling the puts to you, agreeing to buy 100 shares. So they need to hedge that position by selling shares in anticipation of the strike price being in the money with the 368s. Good morning, deep in the money. Any big news this week? No, not really. It's a bunch of Fed speakers for the week. You do have Powell testifying in front of Congress tomorrow. That could have some weight to it. Not sure exactly what he's testifying for, but that could be a market mover tomorrow at 10 a.m. You have Fed Cook testifying and Jefferson testifying all at the same time. Mester speaking at 4 p.m. at the market close, so that might not have as much weight to it. And then you have initial jobless claims, continuing jobless claims Thursday. Powell testifying again at 10 a.m. I think you have some data coming out Friday. Yeah, you have PMI coming out Friday. So it's going to be a pretty boring week in terms of data, but we have a lot of Feds coming out and talking that could sway the markets in one direction or the other. And my guess, they're going to give some sort of reasoning as to why they added another 50 basis points to the terminal rate, or the rate that they're expecting by the end of the year. So probably going to put some pressure on KRE this week. If rates are going up, that would send KRE down. But then I also have a long position with Tesla just because of the squeeze that we're still experiencing in the stock with the 265 strike price and the 270 being pretty hot. So have some longs, have some shorts. Always good to balance out your portfolio. Do I use Ameritrade? No, I don't use TD for my trading. Been trying to transfer my money over, but every time I try to, Robinhood always blocks it, so quite annoying. I think I have to transfer a different amount of cash, but yeah, spreads are pretty wide. Let's see. If you're looking at, say, a 368, 369 called credit spread, that would be what I would look for right now. 38 cents for the bid and 42 cents for the ask. So you have a 4-cent bid ask spread, which is pretty rough. That means you're taking a $4 loss right on the open of that. So there's probably not a lot of trading volume today. That would be my guess as to why the spreads are so wide. But yeah, it looks like QQQ turned around at 368. So again, market makers took advantage by selling the shares as soon as it went just above 368. That way they can hedge their 368 puts that everybody bought before the weekend. And this could be the point that we end up reversing back down. Tesla's still going up 2.2% now. Almost just 270 already. 266.50. I don't think that call debit spread gained any value yet. Yeah, they're trading at 217. I bought them at 215. So because of the bid-ask spread, didn't get any profit even though it moved up $1.50. AMD has a 10-cent spread. Jeez. Let's see. AMD. Oh, wow. AMD is below 120 again. That's kind of surprising with Nvidia up 1%. But yeah, Tesla right now, still experiencing the gamma squeeze that we've been experiencing for the past month. Really starting right after the May expiration, right here on like May 26th is where we just had straight up and to the right, basically, until this month's expiration, June 16th. But there's still a lot of calls that are getting bought out of the money right now. Looking at the 265 strike price, that's the first most popular one with 12,900 versus only 3,600 calls. 3,600 puts. So there's about 4 times as many people that are buying calls versus puts at the 265. And looking at the volume, you have 28,000 in volume versus only 8,500 in volume for the puts. So there's 3 times as much volume. Almost 4 times as much open interest. Looking at the 260 strike price, you actually have more volume in calls and puts, 14,000 versus only 9,700. So people are actually buying in the money. And there's actually in the money open interest with 17,700 calls and only 8,200 puts. So that gives this stock a lot of support down below to 260, which is good. That's what you want. You want enough calls to already be in the money, and then you want this stock obviously to keep moving up, putting more and more of these options in the money to where the market makers have to continue to hedge and buy the shares. And then the next popular strike price is at 270, 14,000 in open interest, 24,000 in volume. And then the puts, there's only 1,500 puts and 900 in volume. So a lot of calls versus puts at the 270 to look out for. And if you're looking at price analysis, I think you have to go back to the weekly chart. There is a gap that it's already filled in here. And then the next resistance would be, there would be some back here at 280 or 279. And then 300 would be your next resistance way up top from July 25th to September 19th from last year. And then supports, probably that gap to 260. You're looking at 255. And then 250 from this range that it had set for about 8 weeks. Yeah, looks like Q's is pulling back here, 366.50. So it ended up getting rejected at 368, coming right back down. And almost back down to where we started at 366. So almost reversing that entire move up. Looks like a lot of money's getting pulled out of Microsoft, interesting enough. Down 0.9%. Meta's down half. You're not really seeing that many names that are in the red to have the Qs down by 0.4%, but interesting. Let's see the other tech names. PayPal is still up 1.4%. This one was beaten down for a while and finally recovered from 60 to 67. Adobe had their earnings last week and they're trading pretty flat. They had an initial jump but then came back down. Currently at 490. They went from 490 to 520. So there wasn't that big of a move for Adobe last week. Interesting. I would have thought that that would have had a decent move like we've seen for this earnings. There's been a lot of like 15-20% moves, but earnings per share came in at $3.91 versus $3 expected, so a huge beat on earnings per share. Let's see if that's a record number. That's a record number for this year. And it's an all-time best earnings per share, but their stock ended up flat. That's kind of strange. It is trading at yearly highs, though, so that does make a little bit of sense, at least. But I guess the yearly highs are warranted if you're doing record earnings per share. So probably not going to come down too much. But there's going to be some supports at 450. And not really much resistance above. Besides the 520 high. Let me get rid of this. Looks like the Dow actually ended up gapping down. 342.50 to 341.80, 70-cent gap down on the DIA. Let's see, IYM, the Russell 2000, didn't quite gap down. Looks like the dollar is doing pretty well. Gold is actually dropping right now. With the dollar going up 0.07%, gapping up. Not quite a gap up, actually. But a decent rebound from the last couple of days from 102 to 102.50. Still on a pretty significant downtrend, though. Probably resistance at 102.60, 102.70. But interesting that gold is below GLD, I should say, is below 180. This one's just been ranging for the past month. On the bottom end of its range right now. Usually the range is 180 to 183, and right now it's at 179.30. So it could be a decent time to buy into GLD. But given that lots of Fed members are coming out to speak this week, I don't think that's going to be the best opportunity yet until after. Because you're going to get a rise in the dollar, you're going to get a rise in yields probably for this week. So GLD would actually probably come down outside of its range by the end of the week and maybe make its way back up after. So I think I'll wait on that opportunity. Yeah, I mean, the market makers have a huge incentive, especially when there's tens of thousands of calls and puts. So it is a pretty, especially over the last month, it's been very accurate. Just largely mechanically driven upside with all the out of the money calls that everybody has been buying. But sometimes the markets are more reliant on technical analysis. Sometimes they're more reliant on fundamentals, data, and things like that. It kind of comes and goes in seasons. We haven't seen the markets been fundamentally based in a while, though, it feels like. Or macro driven, I should say, would be the best way to describe it. People piling into the 365 puts, 20,000 in volume, 8,500 open interest. So they're tripling down there. But a decent amount more calls in the volume for the 267 strike price, 26,000 versus 22,000. So a little bit of edge on the calls at 367, but the open interest is about 3,000 higher for puts. So you might have some back and forth going in at 367. But below that, 366, 365, you're going to be bearish. So the numbers I would be looking out for here will be that 366 strike price, but you need to come significantly below it. So you would probably need to see something along the lines of 366.50 or below. And really, I would want to see below the pre-market lows, which is, let's see, 364.95 to turn bearish. Let's see if there's any lowers. 364.99 and 365.05. So yeah, that is the lowest low. 364.95. Then we would turn bearish, I would guess. Do I think the markets will be propped up this week? I'm thinking we'll probably either trade flat or come down, would be my guess. Just given the huge options expiration we just experienced and how there was a ton of calls that were expiring. I would imagine that some of those calls that were in the money, people would want to take profits on them. But not sure if we'll see any severe downside for this week. So my guess will probably be bearish or neutral. Kind of thinking about taking a short position on GLD for the week. Feel like it's a bit too late since we already went down 181 to 179 and we're at the bottom end of the range. So that would be a little bit of a precarious situation, I would say, to take the short now. Oil is actually down pretty significantly too, 2.2%. So that's either recessionary with a dollar up. The dollar would be down if that was recessionary, so that doesn't seem likely. So the dollar going up, that's bringing commodities down. Commodities and metals, with gold and oil both down today. But 2.2% is actually pretty sizable on oil. 72 to 70. But this one's just been kind of range bound too, very similar to gold GLD. Whereas the dollar has been on a pretty decent downtrend. Thanks, Dom. Do I use multiple monitors? No, not usually. I have this one, but I hardly use it. I do have this set up to where I have multiple charts on my screen, which is helpful. Like if I want to check out on the price of a, say, a QQQ put while I'm watching QQQ itself. Say if I want to go with the 365 put, I can add this to the bottom right and keep an eye on both Qs and the put value. It's at 52 right now. So if I wanted to take a trade on this, assuming Qs is going to be bearish, I'd look at where we're trading right now, if there's any sort of supports or resistance that were close by, and then find the same thing for the put. So right now could be a decent time to buy a put for a scalp position at like 40, 42. And then if it does end up managing to come back down, you could sell that. Possibly back at the bottom of the range, which for this would be 60. But I'm not going to take that trade today. Good morning, Al-Qaeda. Do I think SPY will fill the gap from the weekend? Let's check. SPY. $439 to 438.28, so about a 75-cent gap above. Again, that was, let's see, 439.03 that it needs to come back above. It's a pretty far stretch for today, but maybe tomorrow, depending on how the Powell testifying in front of Congress goes. Maybe that could be bullish. But today I don't think that's in the cards. SPY's down 0.5% right now, so pretty rough compared to the Qs, down 0.3. IWM is actually recovering a tad. And this one already filled in its gap, I think. Yeah. Qs, let's see if this filled a gap. Yeah, that's already filled the gap too. And then the Dow Jones has yet to fill. DIA, I should say. Pretty sizable gap here versus SPY or the other names. 341.64 all the way up to 342.70. So it's like $1 and some change that it needs to fill, which is like 0.35% that it would need to go up. Downtrend for the day. That's what it's looking like. Just based on the options chain, seems more likely that we would head down. And based on, I guess the trend is kind of neutral right now. You're at 43 RSI, so it's not extreme weakness on the 5-minute chart yet until you get down to like 35 and below. So you probably need to get down to like 365.50 or so for that to play out. But yeah, Tesla's pulling back here a little bit, 264.50. Nvidia still kind of up 431. Apple's pulling back from its morning high. Close to filling, or close to a double top, but not quite. It's the lower high. So that would be a bearish trend, or start to a bearish trend if we get a lower low. But yeah, Q's just below 366 now, so now you might get the market makers starting to sell off. Again, with all the open interest and the volume on puts with a 366 strike price being about 5-6 times as many puts versus calls, and then the 365 strike price, there's about 3 times as many puts versus calls for the open interest, and the volume is about 10 times higher for the 365s. And the 366, there's about 4 or 5 times as many volume inputs. So likely more downside to come. Again, though, I think we need to get below the pre-market low at 364.95 if we really want this to be bearish. Good morning, AA. Yeah, that's what I'm thinking. Looks like the best case right now. You could open them now and just close at the pre-market low if it gets close to it. Or just wait on the pre-market low to break at 364.95. Yeah, we're getting close to that low. About 30-40 cents away. Microsoft's down 1.3%. That's leading the downside right now. Pretty heavy stock with a $2 trillion market cap too, so that doesn't help. And you got 3 names in the red now. And Tesla pulling back, Nvidia pulling back, Apple all pulling back, leading to more downside here. But again, I still want to see below the pre-market low in order to call it a bearish day. Looks like my call debit spreads on Tesla are down about 15%. So I could have bought them cheaper. Might double down. I don't think that today would be a good day to double down though. If I do, it'll be by the end of the day rather than right now when we're just getting close to the pre-market lows. But yeah, overall, pretty broad sell-off. Q's down 0.75, SPY down 0.75, IWM pulling back again to 0.9, and the Dow Jones 0.9%. So more sell-off in the IWM and the Dow Jones than for the tech-heavy NASDAQ right now. Any trades for SPY today? Let's see. SPY. Lots of 435s. Lots of them. 16,000 in open interest, 71,000 in volume. You're only looking at 550 in puts, 3,600 in volume. And there's almost 10 times as many puts in volume at the 436 strike price too. So my guess today is going to be below 435 on SPY. Q's just broke below that pre-market low right now. Trading right at 365. It's a nice little breakdown there. And again, there's hardly any puts that are down to these strike, or hardly any calls down to these strike prices. Lots of puts getting bought, 10 times as many puts on the volume, and about 3 times as much open interest at the 365 puts. And then the 364 strike price even has 8,100 puts in open interest. 363 has 7,100, and then the next hot table is a 360 strike price. I don't know if we'll get there today, but there is 14,000 in open interest there. It's a lot of open interest at 360. If people buy too many puts, can that influence the stocks to go up and change to bullish? Not necessarily. Usually the market makers want to be on the side that the markets are pushing for rather than going against the grain. If they wanted to, say we get close to 360 with 15,000 puts there, then they would have an incentive to not pay out those puts, not cash in those puts. So if it's a far enough away strike price, then yes. But if you're talking like the 364s, the 363s, they're not going to try to stop us here. But if you get down to 360, on the other hand, that's another 1.25%, then they'll have some incentive to stop at 360 versus stopping where they are now. But right now, they're selling off the shares in anticipation of the 364s being in the money, the 365s being in the money, possibly the 363s. Didn't buy anything, but I had one on my watch list, up 200 in profit. It's always the worst feeling when you miss out. But yeah, I wish I had got that. 365 put was 40 cents. Now it's at 120, so that's up 200%. But I don't have any day trades available to me, so couldn't make it anyway. But yeah, Nvidia, Apple, those two are pulling back. Tesla's pulling back some from the top at 267 to 263 right now. Amazon, pretty major pullback down to 125 from 127 this morning. Google almost at the morning lows at 123. Meta's kind of chilling at the bottom at 277.50. And then Microsoft, the worst of them, down 1.6% today. That's a decent move for Microsoft. Not one that typically moves more than about 1% a day. So the VIX is up 2.6%, 2.7% now. Nice little rebound in the morning. The VIX was actually open yesterday, really? That's interesting. I did not know that the VIX was open on holidays. Yeah, it's the dollar that's having a pretty sizable effect. Up 0.2% now to 102.70, so it's coming up on some resistance here at 102.60 to 102.70. So we'll see if it ends up passing that. That could be potential for a reversal for the dollar, which would end up in Qs coming down. Generally, equities would come down, stocks. And then gold would come down with that too. Even with gold at its range lows, that could be a breakout to the downside. Yeah, 24-hour market with the 24/5 market instead of 24/7, but it's really annoying though, because it seems like every day at like 3 or 4 p.m. there's always a huge sell-off, and by the morning it always rebounds. It's like an everyday occurrence. You can't see it on this chart because this is only the starting at, let's see. Oh, I guess it does have it. Yeah, 4 a.m. there's a major sell-off from 367 down to 365, and then it rebounded all of that, and now it's selling off below it. But there's usually some sort of sell-off at like 3 or 4 a.m. every day, it seems like. It's very strange. Q's down to 364.20. So we're getting close to the 364 strike price now. And that's, let's see, 81,000 puts in the open interest, 7,100 for the 363 strike price. So maybe you end up slowing down once we get to about 363. Because then the open interest drops down to 4,500 from 7,100. So my guess will probably lay somewhere in between 363 and 364 for a minute. Because there's not really much incentive past 363 for the market makers to keep on selling. Unless they're expecting us to go all the way down to 360 by the end of the day. But again, I don't think that's likely. It could happen, but that's another $4 drop, or about 1.25%, which would be a total of 2.35% for the day. July expiration, it's a ways out, but it's a good one. If I was going with July, I'd be way out of the money. Like 350, I would probably call it for July on Qs. All right, just got down below 364 for Qs right now. So again, I think this is where the markets could take a pause. We are oversold at 28 on the RSI. That doesn't mean that we have to rebound. But my guess, we end up chopping around 363 to 364 before we make our next move down. If we make our next move down, I should say. Looks like carry is dropping with the rest of the market too. The regional banks down to 41.90. Let's see if there's any Fed speakers coming out today. Don't think that we have any this morning. Waller, it's on Thursday. Today we have Williams speaking at 11:45. Williams is a slight hawk, so if they give their reasoning as to why they want to raise rates 50 basis points, that could have some impact at 11:45 at around noon. At the money at the time I open the positions. Yeah. Near-term put spreads definitely haven't been working because the markets kept pushing up with all the out-of-the-money calls that everybody was buying. Let's see if anybody's buying out of the money puts now for this week's expiration on Friday. Not a lot of calls getting bought for this Friday at current levels. Yeah, hardly any. But the puts, there's a lot of volume in puts actually. At least for the 365 strike price, there's 16,000. Outside of that, there's not really much besides the 362. Interesting choice with the 362. Unusual that it would be at that strike price instead of 360. 11,000 of those versus only 7,000 of the 360s. And then open interest is about equal where we're at. 7,200 puts, 7,100 calls. If you do get down to 362, where the volume is, there's about twice as many puts to calls. Very curious why they chose 362 though, instead of 360. Let's see what they're going for. They're going for 178 for this Friday's expiration. And that was kind of a sudden jump in volume too. It wasn't like a trickle in, so it's probably some institution that's doing it at 9:35, 9:40, and then at 10:15 and 10:30. And these were going for less than $1 this morning, so they got them cheap. Now they've doubled almost. $184, $185 for 714 on IWM. Let's see, IWM trading at 184.30. 714 expiration. You got 3 weeks until then? No, 4 weeks I think actually. If you want a bull market, you want to see a recovery in IWM, but if you're seeing a broad sell-off like we are today, that's not a good sign. If this trend continues throughout the week, it'll be very bearish for the overall market. And then if you want to see bullishness, you want to see it in IWM, you want to see it in the Dow Jones, the laggers, versus QQQ, the leader. You want to see that pulling back and money being poured into DIA and IWM, but that trend has not started yet. Look at the 1 year daily chart, oversold RSI, MACD. Let's see for IWM. 1 year daily chart. 56 for the RSI, so it's kind of curling over from almost getting overbought at 189. You're at the bottom end of the range that it's set for that little 1, 2, 3, 4, 5, 6, 7, 8-day trading time frame. So if you assume a breakout below, that trade could definitely pay out. And maybe you head down to something like 181, 182, where the middle of this large candle is. I would probably expect the same kind of price action on QQQ, where we trade flat and then come down, but it seems like a pretty sharp reversal so far. Probably some supports at 3. Let's see. It's hard to call a support down here, but 360, 362 maybe. Yeah, IWM was trading in that range for a very long time, between 170 to 180. So if it loses this range, then that's the next place that it would go to, if it gets beyond the halfway of the candle that broke it out at 182. And with the dollar and yields going up this week, I think that trade could play out pretty quick. But I would probably want to take profits at 182 by the end of this week if I were in the same trade. QQQ just kind of chilling at 364 right now. Still in the downtrend, still at 30 on the RSI, so still very weak. But getting some supports just below 364 right now. So if you want to see a crack of the 364 level, you need about 40-50 cents usually. So you need to see it below 363.50 if you want to continue the downtrend. But then the next popular strike price on the puts would be the 363s, where it could pause that again, similar to what it's doing right now. The SPY changing directions. Let's see, SPY. It could be, but I wouldn't call it yet. It's at 27 on the RSI, so it's extremely weak. And there's still a lot more puts versus calls. Even above at the 436 strike price, there's 3 times as much volume. And hardly any puts in open interest, only 200 versus 13,500 in open interest puts. You really don't get bullish, it seems, until you get back to 438. So it would have to recover about 230, 250 from where it's trading now. And that's with the volume at 127,000 for the 438 calls versus only 69,000 for puts. We are seeing a little bit of a recovery for Tesla and Nvidia right now. Tesla was down to 263. 262 actually, back up to 264 in Nvidia. Not as much of a recovery, but it was down to 427, now to 429.40. So that's probably what's leading QQQ to go up a little bit here, with a recovery in those two names. Microsoft is still down 1.5%. And Apple's about break even. Do I think Qs will be below 162 today? I don't think so, no. I think that probably it's going to stay above 363 would be my guess. That would be where I would call it off. But, I mean, if you're looking at the trend, it's still down. You're still at 40 RSI, so it's still weak. So you are betting against the trend. But my guess, since the open interest drops pretty heavily below 363, there's not going to be that much incentive for the market makers to keep on selling it off below that. You're looking at 7,100 to 4,400 or 4,500 from the 363 puts to the 362 puts. So that sudden drop in open interest makes it less likely that we'll get down below 363, I think. Kroger is an AI stock now. Oh, God. Puts call ratios. How helpful is that? Some people use it as a contrarian indicator. If lots of people are buying calls, then people will say that it's bearish. We've been seeing a lot of call buying recently, and then we had the big Friday expiration. So all those calls expiring means that either people have to roll or they have to choose a new direction. So my guess, since we had so many calls buying over the past month going into the June 16th expiration, we'll probably switch over to puts. But I think that we will need a catalyst in order for everybody to start piling into the puts. Because otherwise, the sentiment is still very bullish. You need something to change the sentiment. So my guess, either we're flat this week, people will stop buying calls, or we're down if there is some sort of catalyst and people start buying puts. But I mostly look at the open interest and the volume. See where the most popular strike prices are for each side. And that'll give you an idea of where the market makers are going to want to keep us above or below. For the call side, there's really not much open interest, but looking at the volume, you have a pretty sudden drop off at the 367 strike price from 41,000 to 20,000. So likely today, I would think that we're going to be between 363 again, where the open interest drops off by about half to 367. So my setup this morning would probably be 363 to 367 iron condor for today for Qs. We're trading at 365 almost, so you're right smack dab in the middle. Right now that trade is paying, let's see, 28 cents. I would prefer to get like 30 cents or more, but it is pretty close to it. Yeah, it's actually paying 30 cents now, so that would be a decent trade to take on. But you would be going against momentum, again, with RSI at 40. If we do end up going below 364, 364.50, then you could see that 363 strike price hitting. But my guess, there's not much incentive for them to sell it below that. So I'll probably set a stop loss at like 40 cents or something like that just to make sure it doesn't lose too much value on the trend down. Do I think Qs will be more red tomorrow? Powell's coming out to speak tomorrow, so we'll see. It's really going to depend on him, I feel like, and what he says. He wasn't very hawkish at the meeting. He kind of was pedaling back what the Fed did at the rate decision in the summary of economic projections, where they said that they're going to raise another 50 basis points. But the way that he was talking about it, it seemed like he was kind of trying to dissuade everybody from believing that the Fed is going to raise another 50 basis points by the end of the year. So, seems like he's more hawkish as of late, or more dovish, I should say, as of lately, which might be bullish for the markets tomorrow. So, I would either call neutral, maybe bullish tomorrow. I might even take a 363, 362 put credit spread for tomorrow's expiration. Let's see how much that's paying out. It's only a couple dollars down from where we're trading now, so I'd imagine that the pay would be okay. Yeah, 29 cents, so similar to that iron condor I had set up. I think I want along the lines of like 40-cent credit though, just in case we are down to 363 sometime later today or tomorrow morning. So I'll wait for those contracts to gain some value. See if we get down to 363. Still seeing the dollar rising at 102.77 right now. The VIX is pulling back with this flat trading action we've got for the past, let's see, 15 minutes or so, 20 minutes. But yeah, everything across the board is pretty red. Down 0.8% for SPY. Q's down 0.9%. So Q's is actually leading some downside here, catching up to what you're seeing for the Dow Jones, 0.9%, and IWM down 1%. So we might be seeing some profit taken and some selling of the big names. But we haven't seen the rotation into the IWM and the Dow Jones yet, so very bearish day overall. Yeah, basically every other central bank ended up raising this month. Canada, Bank of England, the ECB, I think the Australian central bank. So that means that the dollar got weaker over the past month, but now we're seeing a recovery for it. And that's likely just in anticipation of the Feds coming off hawkish this week, considering that they raised the terminal rate where they expect rates to be by the end of the year by 50 basis points. So that's probably going to have some upside for the dollar this week, but over the past month, it's been very bearish on the dollar just because every other central bank has been raising while the Fed decided to pause or skip, whatever you want to call it this week. Last week, I should say. But I don't think that Powell is going to come off hawkish tomorrow. I guess it is testifying in front of Congress, so it really won't have much weight to it either way. I forget what he's testifying for. Powell, testify. U.S. Senate, June 22nd. Testifying in front of the Senate Banking Committee. Twice yearly report. I feel like he didn't testify that long ago. And it's supposed to be twice a year. But yeah, that could have some movement, some volatility tomorrow. I'll definitely be streaming it at 10 a.m. But I don't think that he's going to come off as a hawk, considering what he was saying at the press conference last week. It doesn't seem like it. Now, you might have some hawkishness from, let's see, Williams speaking today in about 50 minutes, or the other Fed speakers, Cook, Jefferson, Mester, Goolsby. He's more of a dove. And then Waller on Thursday, I think they're pretty hawkish. So Thursday you could see more sell-off from Waller speaking, but it is at 4 a.m. So speaking outside of market hours doesn't usually have as much impact. And there's really nothing on Thursday besides Powell at 10 a.m. too. And then Friday you have Bullard at 5:15 in the morning, Bostic at 8 a.m. That could have some impact since it's at 8 instead of bright early in the morning at 5:15. But yeah, we'll see how the Fed speakers affect the markets this week. That'll be definitely interesting to see with the new terminal rate at 4.6% by the end of the year. Hawks and doves. So hawkish means that the Fed member is more on the side of raising rates to cool off inflation faster, whereas a dove is more on the side of kind of waiting and seeing as of right now. So this month we got the pause or the skip, which was more dovish on the Fed's end, but they try to kind of play it as hawkish by raising where they think the rate's going to be by the end of the year. So they kind of had to play this balancing game. But basically a hawk is somebody that's more on the side of raising rates super, super high. Fed Bullard would be a very good example of that. He was calling for 5.5 to 5.75% before everybody else was. I think probably like 6 months ago at this point. Whereas everybody else was on the side of like 4.5 to like 4.75%. And then somebody that's a dove, I think Goolsby is more dovish. And that person would be more on the side of, keeping rates either where they are or even cutting rates if they see any form of, the economy deteriorating. Then they would flip over. They would want to start cutting rates. They would be the first to turn over and start cutting rates. And you can always check out the Fed cheat sheet to see which ones are more dovish, which ones are more hawkish, and kind of anticipate what they're going to say whenever they speak. So yeah, Goolsby is the most dovish member of the Fed. Cook, second most dovish. Those two are speaking, I think, on Thursday and Friday. Harker, Logan, both in the middle. Williams, slightly hawkish. And then again, Fed Buller, the most hawkish. Kaskari, second most hawkish. Waller, third most hawkish. So you have a decent balance between the Hawks and the Doves speaking this week that could end up trading us flat. But if you look at the dot plot, everybody, it seems like, ended up raising their estimates for where they think the rates are going to go by the end of the year. So they're going to have to try to explain why they said that. But yeah, I think that's all the trading today. It's 11 o'clock. So I will catch y'all tomorrow at 9:30. See you, everybody.